So let us continue the topic of deductions under section 80. We have covered till section JJA, which was related to biodegradable waste in yesterday's lecture. Now let us start the deductions after JJA. So let me share the screen and let us start it. Today is 22, I think. So I 22 or 23, I don't know. What is the date today? 22 or 23?
23.
23. Okay. 23rd October 2021. So let us now continue the deductions. So the topic deductions under section 8 is still going on, and we will wind it up this topic today itself. Now tomorrow I'll be having extra classes. From tomorrow onwards, from Sunday I'll be having the class, and we will start new topic tomorrow. That will be house property. Timing of tomorrow's class I will inform you later on. So deductions under section 80 being continued. I have covered till 80 JJA. So now I'm starting with next one, and it is 11th was double G A, GGC, then it was G H I, IAC, IBA, yes. So now it will be serial number 11, 12, 13, 14, 15, 16, 17, 18th deduction now. Section 80 QQB. It is basically given on royalty income of authors. When we write book as a teacher, I have my own book. I am the author of book Income Tax, Concept Building Approach as well as Principle. So whatever royalty income I am earning, I can claim this as deduction under section 80 QQB. To promote this interest in book writing, we get deduction. Department gives you a deduction under section 80 QQB, but there is a limit, maximum 3 lakh rupees. So 80 QQB is the deduction which is allowed on royalty income which is earned by the authors. Condition is you must be a resident individual. That means the basic purpose is to promote the people who are resident in India. Resident individuals. They are earning royalty income. They are earning royalty income. In this case, the amount of deduction is royalty income earned or royalty income or maximum 3 lakh, whichever is less. So 3 lakh is the maximum limit under 80 QQB. The purpose of deduction is not to fully exempt any income except those tax holiday section like 80 IBA, IAC, which I have discussed yesterday, where the income is 100% exempt or not 100% exempt, 100% allowed as deduction. The purpose of deduction is not to make sure that assessors don't pay any tax. Through this section 80, the department promotes some things like 80 QQB helps in increasing the disposable income of authors. If they are writing the books, then they are getting some benefit from the tax department. And it is not a small benefit. Like suppose if I am under 30% slab, if I am giving you my example, like if I am under 30% slab, and if till 3 lakh I will get a deduction indirectly, do you know how much I have saved? Around 90,000 per year I am saving, which is not a small amount. If you think from the government's point of view, 90,000 is indirectly given by the government to this person who is the author. Had there been no such deduction, government would have collected how much tax? This 90 extra. So to one individual, government is indirectly giving 90,000. If you take it, assuming that there are lakhs of authors in India, then it is a huge amount. So deductions, the purpose of deduction is to provide some motivation to the assessees. But it doesn't mean that government do not collect any tax or they will give all this tax amount as deduction. No. So that is why in every deduction, normally you will find that there is a maximum ceiling. Normally there will be maximum ceiling. Like in 80C we have the maximum ceiling of 1,50,000, 80 triple C 1,50,000, 80 CCD maximum 10% of salary or 14% of salary, 80 CCB 1B maximum 50,000. In almost every in 80D 25,000, or if senior citizen extra 25, but there is a maximum ceiling normally in every deduction. So TQQB is not the exception. Here also the royalty income or 3 lakh, whichever is less, is allowed as a deduction. Now royalty income can be earned in two different ways. Some publishers, now who gives royalty? If I am an individual, I have written a book, like for example my book is published from under Singage Publishers. It's an international publisher house. So Singage Publishers is publishing my book. So I am earning royalty income. So this person Naveen is earning royalty income. Naveen is an author, published the books from Singage Publisher. So this person is earning what? Royalty income. Now, what is the basis of earning royalty income? There are two different ways, either lump sum consideration or percentage base. So the publisher can give royalty income as per the agreement with the author, either lump sum, that every year you take this much amount, whether you sell any book, whether your book will be sold or not, then it is totally the loss or profit of the publisher then. So that is lump sum consideration or percentage. In almost, or you can say in most of the cases, percentage base is the acceptable criteria. Publisher is also happy and author is also happy. In percentage basis, how the royalty is given normally, number of books sold multiplied by not the market price but the price at which this publisher sells the book to distributors, bookshop owners. As a retailer or as a consumer, the person who is purchasing the book might be purchasing it at MRP or at 5 or 10% discount. But bookseller must also be earning something. So royalty is not given on MRP always. Normally it is the price at which the book is sold to the distributor into number of books sold, you get some value multiplied by some percentage. So that income is given to the author. So author is earning the income on the basis of percentage. In some cases, you can earn the royalty income on lump sum consideration. So that is a different course of point. That is a different point altogether. The purpose is whether you are getting lump sum or percentage, the maximum deduction you will get is 3 lakh rupees. But in percentage, so many times an issue also comes. What is that issue? One point you should note, in case you are earning royalty, in case the royalty is on percentage basis, then for the purpose of deduction, for the purpose of deduction, the royalty income beyond 50% is ignored. Beyond 50% is ignored. I will explain this point through an example. What do I mean by this? So let me discuss an example from my book. Then you will better understand what is this extra 15% is ignored. What do I mean by this? So this illustration is given on page 26 from my book. Illustration. So I will give you only brief point and then I will explain. X earned the royalty income of 3 lakh 50. This is what the illustration says, that Mr. X, a person, earned the royalty income of 3 lakh 50. This income is earned during the previous year 2021 on the basis of 20% of value of books sold by the publisher. Now I am earning income on percentage basis, and what is my percentage? 20. Now normally 10% is the acceptable criteria. In most of the cases, you will find the percentage which is agreed between the author and the publisher is 10%. But in my example, I am assuming that the person is earning at 20%. Now, this is the case, and suppose you have to compute total income. So what you will write? Income from other source. First of all, this is an income, you write it. Royalty income is income from other source, you write it. 350. Then you will write, is there any other incomes? In my example, suppose not given. Gross total income 350 less deduction under section 80 QQB. Let me assume that this person is a resident individual earning royalty. So what will be 80 QQB? I told you the royalty income or 3 lakh, whichever is less. Can you tell me in this case what will be my answer?
2,62,500.
Oh, you have computed the answer. Yes. So that means what I wanted to explain to you is this point. If royalty income is on percentage basis, to compute the deduction, royalty beyond 15% is ignored. Now this 3,50,000 is the value when I got 20%. For the purpose of deduction, I should take only maximum 15%. So 350 is the income which I earned when I received 20. Had the percentage been 15, how much I would have earned? Divided by 20 into 15, I would have earned 262,500. This or 3 lakh, whichever is less. So 262,500 is the lesser amount between these two, 262,500 and 3 lakh, and the taxable income now will be 87,500. Suppose in my example, this income is lump sum consideration, lump sum, not percentage. Had this 350 been lump sum, can you tell me what would have been my deduction? What would have been the deduction in that case?
3 lakh.
3 lakh. Because in case of lump sum, there is no problem. For percentage, now if the percentage is 12%, then also there is no problem. 14%, no problem. Till 15% percentage, no problem. Very simple answer, royalty income or 3 lakh, whichever is less. The moment it exceeds 15%, then extra work is created. First of all, you convert that royalty income, assuming 15% is there, compare that value with 3 lakh, and whichever is less will be allowed as deduction. Next point. Textbooks are not covered. If you are writing textbooks for college, sorry, for school, you will not get any deduction under QQB. For college textbook, that is allowed. For higher education textbooks, it is allowed. If you are writing, for example, someone is writing business studies books of class 12 and earning royalty income, no deduction under QQB. For writing magazines, okay, journals, etc., not covered, are not covered. And one or more things you should note. Newspapers also are not covered. Writing something in newspaper, journal, magazine, school books not covered. Higher education is covered. So textbook for schools are covered. So textbooks for colleges, higher education are covered under 80 QQB, not school books. That's it. This is what 80 QQB is. Any problem you ask me, otherwise if it is understood carefully and clearly, please raise your hands. Okay, next deduction. 19th, RRB. It is again royalty income, but on patents. When you invent something, or if there is any new invention, then you can register that invention under patents. So you are getting the ownership of that. If you are having patent in your name, then you are the owner. Without your permission, that new invention cannot be used by anyone. So you can sell your invention to any other company or anyone. They will give you royalty. So 80 QQB was royalty income on books, and 80 RRB is royalty income on patents. All other conditions and everything is as it is same. So there is no difference between 80 QQB and RRB. Here also the amount of deduction will be royalty income on patents or 3 lakh, whichever is less. Everything is as it is same. Whichever is lower. So it is same just like 80 QQB. The only difference in QQB you are having royalty income on books when you write something, and in 80 RRB it is royalty income on patents when you invent something and you have registered that invention as per the provisions of this Patent Act. So you are having patent in your name for that. If you want to sell your invention to any company, any agency, any manufacturer or whatever, they will give you royalty income. So that is also allowed as deduction under 80 RRB. Otherwise everything is same. I hope this is also clear. Next point, 80 TTA, a relevant deduction. 80 TTA. It is interest income on saving account. It is interest income on saving account. So when you earn any interest income on saving account, so first of all, you are an individual, but other than a resident senior citizen. That means you are an individual, but you must not be a resident and your age must not be 60 or more. That means less than 60. You must be less than 60 and you must not be a resident. If you are resident 64 years, then you will not claim 80 TTA. You have another section for the same thing. Like I am covered under 80 TTA because my age is less than 60. That's it. Or every HUF. So it is for these two categories, individuals other than resident, senior citizen or an HUF. Income is from saving account with, now you can open the account with any bank or even in post offices. Those of you, if you are living in not in metropolitan cities, if you are living in village or even in small towns, then this post office is treated as more trustworthy and friendly as compared to bank. I'm not taking the example of Delhi or Bombay or metropolitan cities. Here the post office trend is not much relevant. But in towns and in villages, post office is more trustworthy and friendly as compared to bank, and that you can ask if your parents are living or if you are living in these areas or your relatives are living. So you can open the bank account or you can open the saving account not only in a bank but even in a post office. Now you must be earning interest income also. If you are having saving account, I have written income by default. What income you earn from saving account? Only interest. If I have written income from saving account, by default this income is interest income. Do you know how much is deduction? Interest or 10,000, whichever is less. 10,000 or whichever is less, interest whichever is less is allowed as deduction to every individual earning income from saving account. No deduction from FD. Do remember that there is no deduction of 80 TTA on interest on time deposit. What do I mean by time deposit? Where my amount will be deposited in a bank for some fixed time. In interest, in saving account, there is no fixed time. Today I can deposit, tomorrow I can withdraw. There is no restriction. That is why saving account is having less interest rate, because there is no surety of the person who is giving the money to the bank. Today I deposited 2 lakh, tomorrow I can go and withdraw 2 lakh. No one will ask me anything. But in time deposit, what do I mean by time deposit? Where the amount is deposited by me for some fixed time. That is why time deposits are normally referred as fixed deposits. Like I have deposited 2 lakh, for example, for 1 year. It is now fixed. Tomorrow I can withdraw it. And if I want to withdraw, I have to pay some penalty also. So if you are earning as an individual less than 60 years, if you are earning interest income on fixed deposit, then you cannot claim any deduction of that interest. Only from saving account interest is allowed as deduction. Second thing, can you tell me, are these two words different, deduction and exemption? Can you tell me the difference between deduction and exemption? Any answer? Difference between deduction and exemption? A common difference, that's it.
Sir, incomes that are exempt are not included in the total income of the SSC, and deduction means that the income is included in the total income, but it is allowed a deduction.
So don't use the word total income, because total income is after deduction. Use the word gross total income. That is more precise. That income, if exempt, is not a part of total income, that is fine. But if you are talking about deduction, then income which is allowed as deduction is a part of gross total income. Then you give deduction. Is it clear?
Yes, sir.
Okay. Now, if you have bank, now raise your hands and let me see how many of you have bank account in a bank. How many of you have your bank account, saving account in a bank? Okay. Now, so almost everyone. Now raise your hands if you yourself operate the account. Raise your hands if you yourself operate the account. Yourself, not your parents. If you yourself operate the account, not your parents. The parents can see your bank account, but if you know how to operate a bank account, only 3 or 4. So you must, this is one thing, you must operate your own bank accounts. If your parents have opened a bank account, now very soon you should ask from them that now I want to operate my bank account if there is not much money. So keep 10,000, 15,000 and you will learn so many things, how to operate online banking and how to fulfill other or how to use that bank account. You only learn when you make a mistake. So if there is not heavy balance in your bank account, because so many times parents accumulate balance in the children's bank account. So if you don't have heavy bank account, then you should learn how to operate a bank account. Now you tell me, if you have bank account, saving bank account, is that interest income exempt or not? Is that interest income exempt or not? Have you seen the passbook of your bank
Exempt, sir.
account? Who says exempt? Who has said that it is exempt?
I mean, deduction is there, like.
No. Deduction is a separate thing. Don't confuse it with deduction. Deduction is a separate thing. As Sanjay has already explained, what is exemption? That is not at all included in total income. So if I am saying exempt, that means it is not together in, it is not at all included in income. So there is no question of any deduction then. So my question, again listen, interest income from a bank account, is it exempt or not? Interest income from saving
No,
bank
sir.
account is exempt or not? Answer is no. It is not exempt, it is taxable. You can get the deduction later on under a TTA, but for the timing you will say that interest income is taxable. Next question on. So one point is clear. Interest income from a saving bank account or interest income from a saving account in a bank is fully taxable. There is no exemption. If I'm saying fully taxable, that means there is no exemption. Of course, From fully taxable, later on you can get a deduction, that is a separate thing, but interest income from a bank account, saving account in a bank is fully taxable. Second point. Now raise your hands if you have visited a post office for the purpose of banking transaction, not for the purpose of registry or speed post, etc. Or raise your hands if you have your account in a post office. Raise your hands if you have the account in a post office. Mansu, you have your account in post office?
No, sir, I raised it like I have went there for some transaction
Okay.
because my
Okay.
grandma is having an account.
Yeah. Because elder people are having the accounts not in a bank. They prefer to go in a post office because in post office the people who sit are more familiar and more approachable as compared to a person who is in a bank. That you can easily observe yourself. You should visit post office, stay there for 10 to 15 minutes, and you will find that the people who come in the post office are mostly the people who are at higher age level. They are more familiar going in a post office rather than in a bank. Now, saving account can be opened in a post office also. You can open the saving account in a bank as well as in a post office. Do you know that interest income from a saving account in a post office is exempt up to rupees 3500? So now these two are different things. First thing, interest income from a saving account in a bank is fully taxable, but interest income from a saving account in a post office is exempt up to rupees 3500. That's it. So let me first note it down so that you also can note it down somewhere. So these points you should remember. So these 2 points have no relationship with ATTTA. These are different points which you should note for your knowledge only. So these are points to remember, or you can say highlighted text. Interest income in a saving account in a bank is fully taxable. But interest income in a saving account in a post office is exempt up to rupees 3500 per year. I'm not writing per year because by default, if I don't write anything, when you study income tax act, by default, if per month, per year, per day is not written, everything by default must be assumed as per year. So I'm not writing anything. Or if you have joint account, then this exemption will be 7,000 in case of joint accounts. Joint account. If this account is in the name of two people, then this exemption becomes 7,000. So these things promote not high class people, because the people who are in high middle class or high, or you can say rich class, they are not at all bothered about this 3,500 or 7,000. But for a lower income class or lower middle class, this amount matters a lot. So such provisions helps in attracting the people who are in lower class to go in a post office rather than in a bank. This provision might help. I have to see exactly the data whether this provision has helped or not, but it might help, because in a bank account you don't get any benefit. Saving account, in post office saving account, if accounts are in the joint name, then 7,000 per year is the benefit. Now, can you tell me, if I ask you the net effect, if I ask you to make a comparison, or not note, just a discussion, brief discussion. This discussion helps in uh, putting some positive stress on your mind so that you can judge your own capabilities, capacity, and you can judge your own imagination as well as analysis skill. I'm simply asking a small question. I'm Mr. X. Which option is more beneficial for me? If I have 10 lakh rupees and I want to deposit it in a saving account, this is my discussion. I want to deposit it in a saving account. If I'm a person who likes to save even a single rupee, I'm a person of that nature, for example, who want to save even a single amount, single rupee. What will be your advice? What will be your advice that I should deposit this amount in any bank, in a saving account, or in any post office? What will be your advice? Or there is no difference, anywhere I can deposit? How will you
If
advise
the
me?
sir, if the interest rate is same, then post office.
Yeah, that is also a good point. I need to make one more assumption, otherwise I cannot give any answer. That interest rate is same. Yes, that also I need to assume before I take a decision. Why post office?
The maximum benefit in post office I can get up to 13,500, but maximum in bank will only be 10,000. So that 3,500 is extra.
Yes. So I should deposit in a post office account, because first of all, if my income is 1 lakh, interest income for example comes out to be 1 lakh, first of all in post office I will deduct 3,500 and I will include my income as 96,500. And after some time I will give deduction also of 10,000. In bank what will happen? I will include the income as 1 lakh because there is no exemption, and then I will give the deduction of 10,000. So indirectly in post office I am getting double benefits. First 3,500 is not at all included as an income, and then whatever balance is there, that is also allowed as deduction up to maximum 10,000 rupees. That's it. This is what a TTA. In case it is clear, please raise your hands. Then I will give you a question and that you have to solve. If it is clear, please raise your hands. Very good. So now you solve a question. Let me give you a small question and then let me see whether you can compute the answer correctly or not. So I'm giving you an example. Those who are having my book, please don't see the answer. Or whatever book they have, please don't see any solution. You should do it on your own. On page 11.27, let me ask this, or let me write the detail of this example. 43 years, Mr. X, income, interest income, saving account in a bank, income 8,000, interest income, fixed deposit in a bank 20,000, interest income, saving in a post office 5,000, taxable salary 6 lakh. And one more thing you should not forget, that I'm not opting for option taxation scheme. As I have told you, no deduction of section 80 to 80C to 80U is allowed except 80CCD subsection 2. So in earlier sections, like in 80 QQB, RRB, I have not explained this point again. I haven't explained this point to you, that if the assessee opts for optional taxation scheme under 115B AC, deduction of 80 QQB RRB is not given, because I don't think it is necessary for me to explain every time for every deduction. No deduction of section 80 is allowed except 80 CCD. Similar is the case with 80 TTA also. If I am opting for optional taxation, I cannot ask 80 TTA. Now this is the question. I am giving you 1 minute to solve and you tell me the answer. So I am coming back within 1 minute. Try to tell me the answer. Any answer?
So deduction allowed is 9,500. Tax
You
on
tell
income,
you tell me final answer. Total income.
total income of 6,20,000.
Yeah, 620 is correct. Please raise your hands if you have computed 620. If not computed, I will tell you. So those who have computed 620, please raise the hands. Those who have computed 620, please raise the hands. Garima, you have not raised your hands. Is there any problem in this question, Garima?
So will we not include the interest income from savings account bank in gross total income?
No, no. A saving. There are two saving accounts. Na? Saving account with a bank and saving account with a post office. So your question is with for both the saving accounts or for only post office?
So for both of them.
No, I will include interest income on saving account with a bank, 8,000 rupees, and I will include interest income on saving account with a bank, only 1,500 rupees.
Yes, so then the gross total income is coming.
Hmm.
No. Yes, it's correct. There's a calculation mistake.
Okay. Okay. Others, Gurnika, you haven't computed the answer. Any problem, Gurnika? Any problem you should ask. Otherwise, we will never learn. Whether others have understood or not, it is none of our business. If I am facing a doubt, I will ask. Irrespective of whether the doubt is silly doubt or tough doubt, doesn't matter. It does not matter if there are 100 people and 99 have understood, but I have not understood. Still, it doesn't mean that only I am at fault. There might be those situations where I am correct and 99 are wrong, because they might be doing, or the teacher also is doing the question in a wrong way. So you should trust yourself. And if you are facing any difficulty, don't just imagine, or don't simply be concerned what others will be thinking. If you think that there is a doubt, you should ask without any hesitation. And that is not only in taxation, but in every area. In any area or at any level, wherever you go, if you think that you have not understood, it does not matter what others are thinking. You should ask without any hesitation. Anyhow, so I am proceeding to the next deduction now, 80TTB.
Excuse me, sir.
Yes.
Sir, just to confirm, when we the amount of 10,000 is given, we include both the savings and the from the post office and the bank.
Yeah, of course, because 80 TTA is the cumulative deduction. It is not for only one account, or it is not for only post office and separate for bank. It is total 80 TTA for one individual, one human being.
Thank you, sir.
Okay. Next is कौन सी है भाई next 21. Yes, next is 21. So you have to learn these deductions. 80 TTB. It is also interest income. But now I'm not using the word saving account. I'm using the word interest income on deposits. So I'm using the word interest income on deposits, 80 TTB. Now, what are the conditions? That you are a resident individual. Since in 80 TTA, I have excluded this resident individual who is a senior citizen also. If I am saying senior citizen, that means age 60 or more. Age can be 60, 70, 80, 90, 100, doesn't matter, but you must be a person having more than or at least 60 years. And you must be a resident. You are having interest income. On deposits, now even FDs are covered. This deposit can be saving account. It can be fixed deposit, does not matter. Every interest income with a bank or with a post office. You cannot cover interest income on deposits with a company, private company. No. If I have interest, suppose I have taken debentures of a private company. On debentures also I will earn the interest. That interest is not allowed as deduction. It is only that deposit which is with a bank, any bank, or with any post office. Now deduction is maximum 50,000 rupees. So this section is basically for giving more disposable income in the hands of the senior citizen. So income or 50,000, whichever is less. That's it. Let me give you a small numerical again for you to solve. Small numerical which you should solve. It is again from my book, page 11.28. And this is the example given on that page. X, resident, 68 years, PGBP income 235, lottery income 120, interest on FD with a bank. $40,000. He invested in his own PPF account 140, and of course he has not opted for optional taxation scheme under 115 BSE. You tell me the answer of total income. Think carefully and tell me the answer. I will wait for your answer. You are having 2 minutes to solve this case. I am waiting for the answer. You are having 2 minutes to solve this.
So 2,15,000.
Yes, 2,15,000 is the correct answer. Those who are getting 2,15,000, they can raise the hands. Rest, please continue solving. Those who are getting 2,15,000, they please raise the hands. Rest, please continue solving. Four people have computed the correct answer. Rest, please continue trying. Five people have computed. Rest. Now you should wind up this case within 1 minute. Maximum in 1 minute you should wind up this case. Any problem you can ask me, otherwise please wind up within 1 minute. Business income, lottery income, interest income total gives you gross total income, and there are two deductions, 80C and 80 TTB. That's it. This is an easy question. Why you are taking so much of time in solving this case? It's very easy. Total of these three incomes minus two deductions. That's it. Hurry up, try to get the answer. 2,15,000. 2,15,000. Yes, 2,15,000. Try to get this answer. 2,15,000. Okay, so let us proceed now. Any problem you can ask me, otherwise let us proceed. 22nd deduction, 80U. 22nd is 80U. It is basically for differently abled people. It is the deduction in case of a person who is having some disability. As I told you earlier also, I have to use this word disability, though it is not a good word to use, because now we have the word differently abled people, but still Income Tax Act is using this word, so I have no option but to use. Otherwise, in general sense, we should use a word which is having acceptability throughout, differently abled person. So rather than using a person who is having disability, we should use a person who is differently abled. It is more humanistic in approach. But ACT is using the old word, so I'm using it. Otherwise, in general sense, always we should use this word differently abled. Now, in this case, it is for resident individual. Who is differently abled, that means having some disability, and this is certified, disability being certified by a medical practitioner, etc. Now even the government has stopped using this disability word, because every person who is differently able, they need to get a certificate from the government hospital, CMO, etc., etc. We have different medical authorities prescribed for that purpose. Now we have Swavlamban card. Swavlamban card. In Hindi, they are using this word. You can see the website, and all the people who are differently able, now they will apply online on the website, and we will be having different. Earlier we were using the word disability certificates, but now from 1st June 2021, now to get a certificate, the people have to apply, or the concerned person has to apply online, and Swavlamban card will be issued. So we have different provisions, etc. for this, but that is only for your information. Otherwise, it has no relationship with taxation. You should only learn that resident individual, differently abled, certified. Amount of deduction flat, because these people have to work harder as compared to a person who is a normal person. Extra pain is being taken by differently abled people, so they need some extra advantage. So the government is giving more disposable income in their hands by giving them deduction, because more is the deduction, less will be the total income, less will be the tax. So I have more cash in hand in my with me. Amount of deduction is flat 75,000, and flat 125 in case of severe disability. In case of severe disability, so the medical practitioner prescribes how much percentage of disability is there in that human being in case of severe disability. And what is severe? If disability is more than 80%. Is equal to or more than 80. In case of normal disability, the deduction is flat 75,000. That's it. This is what ATU is. I hope it is clear. So these are total deductions 22, and one which I left earlier, 23rd, section ATG, and we will cover this ATG now, and then we will be having the chapter deduction complete, so that in the next class, that means tomorrow on Sunday, we will start house property. So I'm giving you 5 minutes break, take 5 minutes rest, and then we will start ATG. It will take half an hour to complete ATG, and then the chapter will be over. So let us have 5 minutes break. Okay, so let us start discussing ATG. Okay, so let us discuss ATG now. That is the last deduction, and after this, our deductions under section 80 will be over, which are relevant for the purpose of BCom Honors semester 3. Now, ATG is basically for donations. We donate. There are so many funds: National Relief Fund, the Fund for National Blood Transfusion Council, Prime Minister Drought Relief Fund, National Defense Fund, Indira Gandhi Memorial Trust, Rajiv Gandhi Foundation, Jawaharlal Nehru Memorial Fund. Then we have donations for charitable purposes, donation to the trust for charitable purposes, trust which are for the welfare of persons who are suffering from mental retardation, cerebral palsy. So these are some diseases, chronic diseases, autism, etc. So we have different donations and contributions. Let me first give you let me first show you the act and how this section 80G has been written in the Income Tax Act. So let me first show you the act. I hope this website is visible. Let us open the act. ATG. I hope it is visible. Font size is also comfortable. Deduction in respect of donations to certain funds, charitable institutions, etc. 80G subsection 1. In computing the total income of an assessee, there shall be deducted in accordance with and subject to the provisions of this section. Now it is technical to read 80G from the act, but if not today, maybe after 2, 3 or 4 years, you have to read the original sections. So it is technical, like in a case where the aggregate of the sum specified in subsection 2 includes any sum of the nature specified in subclause 1 or subclause 3a, subclause 3AA or subclause 3ab, etc. etc. These are some funds. You can see the example: National Defence Fund, Jawaharlal Nehru Memorial Fund, Prime Minister Drought Relief Fund, Prime Minister National Relief Fund, PM Cares Fund, Africa Public Contribution India Fund, National Children Fund, Indira Gandhi Memorial Trust, Rajiv Gandhi Foundation, University or educational institution of national eminence, Maharashtra Chief Minister Relief Fund. There are many such funds. Jila Saksharta Samiti, National Blood Transfusion Council, Army Central Welfare Fund, Indian Naval Benevolent Fund, Air Force Central Welfare Fund, Andhra Pradesh Chief Minister Cyclone Relief Fund, National Illness Assistance Fund, Chief Minister Relief Fund, Lieutenant Governor Relief Fund, National Cultural Fund, Fund for Technological Development, etc. National Trust for Welfare of Persons with Autism, Cerebral Palsy, Mental Retardation, and Multiple Disabilities. Swachh Bharat Coach, Clean Ganga Fund, National Fund for Control of Drug Abuse, donation for the government to the government or any local authority to be utilized for any charitable purpose other than the purpose of promoting family planning. Any sum paid as donation for renovation or repair of any such temple, mosque, gurdwara, church, or any place as is notified by the government. Donation to Indian Olympic Association. As you can see, the purpose of showing you these donations is there is a long list of donations, and ATG is very lengthy. You have to read it in detail in case you want to apply it in real life. Then you have to first read the provisions of ATG in detail. So many conditions and formalities are involved, as you can see. So I will simplify this for you. So let us now make simplification of ATG. Now, what is basically ATG? By having a look at this act, you must have understood that it covers donation. when you donate something, now I can donate in 100 of things, 200 of things, lakhs of things. Every such donation is not eligible for deduction under section 80G. Only those funds or those contributions or those accounts which are eligible or which are written in 80G are those on which Act allows you a deduction or department allows you a deduction. You cannot say that since I have given 10,000 rupees to my friend, give me the deduction. No. Income Tax Act will tell you under section 80G, if you want to claim a deduction, then which are those eligible donations. Now there are two categories of donations. There are some donations in which whatever you donate is eligible for deduction. I'm using the word eligible. I'm not saying is deductible. I'm using the word is eligible for donation. There are two categories. Category 1 is having those donations in which whatever amount you donate, if you are donating 200 crore rupees, that is eligible for deduction. I'm not saying 200 crore is the deduction. 200 crore, which is your donated amount, is eligible for deduction. How much will be deduction? That is another question. But 200 crore is eligible for deduction. It's my example only, that there are some donations in which whatever you donate is eligible for deduction under section 80G. Then there is another category of donation within section 80G in which whatever you donate is not or might not be eligible for deduction. There are two categories of donations under 80G. Category 1, where there is no maximum limit on the amount of donation. Whatever you donate is eligible for deduction. Then we have category 2, where whatever you have donated might not be eligible for deduction. So there is a maximum limit. Is this little bit clear? If yes, please raise your hands. Are these two categories little bit clear? If yes, please raise your hands. That there are some donations in which whatever you donate is eligible for deduction, and there are another category of donations in which whatever you donate might not be eligible for deduction. Okay, now let me share the screen and let me simplify what I am saying now. Now 80G covered donations, and first of all you must know that 80G is available to all assesses, individual, HUF, firm, company, doesn't matter, it is available to all assesses. Now in this there are two categories. Donations are divided in two categories. In category 1, there are those donations in which there is no maximum limit applicable. Category 1, no maximum limit on the donated amount. In category 2, some limit is applicable. On the amount donated. In category 1, I can donate 10,000 crore rupees, there is no problem. That 10,000 crore is eligible for deduction. In category 2, if I have donated 10,000 crore rupees, there are chances that 10,000 crore is not eligible for deduction. This is the only difference. Now, in these two categories, there are two types of donations. Some which are eligible for 100% deduction and some which are eligible for 50% deduction. In category 2 also, some donations which are eligible for 100% deduction and some donations which are eligible for 50% deduction. What are for 100%? So I will tell you only relevant ones. You are not supposed to learn each and every those donations which are covered in category 1, or I will tell you only those which are relevant and that you should learn. In category 100%, what you should learn is Prime Minister, KS Fund, Let me tell you the relevant ones only, and only those you should learn, not all. Prime Minister National Relief Fund, NRF, National Relief Fund, PM Cares Fund, that is created last year in Corona, National Defense Fund. So I am telling only relevant ones. You should learn only these. National Children Fund. You should note these, which you have to learn. These can come at your level. Not everyone will be asked. Okay, Prime Minister National Relief. I am using short form from the book or from any material. You will find the full form. National Defense Fund. University. Oblique an institution. As approved for this purpose. Jila Saksharta Samiti. These are relevant ones, in which you can donate any amount. Saksharta, in which you can donate any amount, and whatever you donate into 100% will be the deduction. NBTC, National Blood Transfusion Council. NBTC, National Blood Transfusion Council. Eighth point. Chief Minister Relief Fund. CMRF. R means relief. Swachh Bharat Kosh. Clean Ganga Fund. Now in Clean Ganga Fund, the person who is giving the donation must be a resident. That is a separate point, which is not there in each and every donation, only in this Clean Ganga Fund. Normally the river Ganga is considered as sacred under Hinduism, and government has extended this benefit only to a resident donor. If you are a resident person, then only you can get the benefit if you are donating towards Clean Ganga Fund. These 10 you should learn, in which there is no limit. Whatever you donate into 100% is the deduction. 4 you should learn in 50% category, and in fact you have only 4 in this 50% category. Prime Minister Drought Relief Fund. Drought. Then Jawaharlal Nehru Memorial Fund. Jawaharlal Nehru Memorial Fund. Indira Gandhi Memorial Trust. IG Indira Gandhi Memorial Trust. And Rajiv Gandhi Foundation. These 4 are there in no limit category, 50%. Now if you donate in these 4 categories, suppose my donation is 200 crore rupees in Indira Gandhi Memorial Trust, multiplied by 50%, I will get 100 crore as deduction flat. Category 1 is very easy category of computing ATG. In this category, whatever donations are there, you multiplied by that respective percentage, whether it is 100 or 50, but there is no limit on the amount of donation. You can donate any amount and you simply multiply it by 100 or 50 as the case. Maybe you will get the benefit. So 10 you must learn in category 1, which are 100%. Prime Minister National Relief Fund, PM Cares Fund, National Defense Fund, National Children Fund. University or institution has approved. Jila Saksharta Samiti, NBTC, National Blood Transfusion Council. Chief Minister Relief Fund, Swachh Bharat Kosh, Clean Ganga Fund. Now in Delhi, because there are some states where CM does not sit, like in Chandigarh we have Lieutenant Governor, in Delhi also we have LG. So rather than CM, for some union territories it is Lieutenant Governor Relief Fund. So both are same. It only depends upon the area or state. Swachh Bharat Kosh, Clean Ganga Fund. In these, whatever you donate into 100% is the deduction. In remaining four, Prime Minister Drought Relief Fund, Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Trust, and Rajiv Gandhi Foundation. These in this 50%. Now you can easily learn this 50% category A, because Honorable Jawaharlal Nehru had been this Prime Minister, Indira Gandhi had been the Prime Minister, and Rajiv Gandhi. These three have been the Prime Ministers, so it's easy to learn by their name. And Prime Minister Drought Relief Fund, because all these three have been PM also. So what you should learn is, in PM Drought Relief Fund it is 50, and then you can learn these three names: Jawaharlal Nehru, Indira Gandhi, and Rajiv Gandhi. For these four, the deduction is 50% of the amount donated. Then in category 2, in 100%, so I will tell you only two which you should learn. If you're donating to the government for the purpose of promotion of family planning, because in India the population is second highest in the world after China, so, and we have limited land available. So normally it has been the discussion for the past so many years that our population should be now under control, otherwise we will take over China after some years, and there will be issues then, because we will be having more people, more human beings living, and we will be having less space, so there will be constraint on the already available resources. So family planning is considered as one of the main objective now. So if you are donating anything with the government or local authority, so it is first point. If donation needs government, for what purpose? The purpose is promoting family planning. The purpose is to promote family planning, FP. Then you will get 100% reduction on the eligible amount of donation, because now it is category 2. So whatever you will donate, if it is 100%, that donated amount will not be multiplied by 100%. As I told you, there is some limit applicable. So whatever you donate in category 2, what happens in category 2? What is the difference between 1 and 2? In category 1, whatever you donate, directly the amount will be multiplied by either 100% or 50%, directly, as the case may be. But in category 2, whatever you donate, you can not directly multiply by 100 or 50. You have to compare this donated amount with the eligible amount. You need to first check whether the amount which you have donated is really eligible or not. If donated amount is, for example, 90,000, I will tell you how to compute eligible amount. This I have not yet told you. If the eligible amount comes out to be 80,000, then 90 is of no relevance. Then this 80,000 is to be multiplied by either 100% or 50%, as the case may be. I hope now you are understanding this difference between category 1 and 2. In category 1, whatever you donate is by default eligible. There is no problem. You don't need to compare anything. Multiply it directly by 100 or 50, as the case may be. But in category 2, whatever you donate, you cannot directly multiply it by 150. You have to first check that what you have donated is really eligible or not, as per the provisions of section 80G. If you think that eligible amount is only 80,000, it's an example only, and donated amount is 90,000, then 80 becomes eligible, and on 80 you will get the deduction on the basis of 100 or 50, as the case may be. Please raise your hand if this little bit difference is also clear between category 1 and 2. In category 1, whatever you donate by default that is eligible, you have to simply multiply it by 100 or 50 as the case may be. But in category 2, whatever you donate might not be exactly eligible. So you need to do one more extra step in category 2. You will first compare this donated amount in category 2 with eligible amount. How to compute eligible, this I will tell you. And then you will see whether the donated amount is eligible or eligible amount itself is eligible. So if donated amount is more than the eligible amount in category 2, then eligible amount is the amount on which you will get the deduction. If donated amount is less than the eligible amount, then there is no problem. Then donated amount becomes the amount eligible for deduction. Let me again share the screen. In category 2, how do we compute eligible amount? Now I am telling you how do we compute eligible amount. Amount donated or 10% of adjusted total income. This is the new point. Whichever is less is eligible. I will discuss this in detail again, but let me give you a small idea. In category 1, there is no problem. Whatever you donate is eligible. You have to simply multiply it by 100 or 50. It is very easy. There is no problem in category 1. Category 2 is also easy, but little bit technical. In category 2, whatever you donated might not be exactly eligible. How do you know whether that is eligible or not? You compare this donated amount with 10% of adjusted total income. How do we compute adjusted total income? You ignore it for the time being. Compare the amount donated with 10% of adjusted total income, and whichever is lower is eligible. So in my example, if amount donated is 90,000 and my 10% of adjusted total income is 80,000, then how much is eligible? 90 or 80? 80 becomes eligible. Similarly, if my amount donated is 90,000 and my 10% of adjusted total income is 2 lakh, then which is eligible? 90 becomes eligible. Whichever is less is the eligible amount, and on this eligible amount, you compute 100 or 50 as the case may be. That I will tell you with the help of a numerical. But I hope little bit structure now is clear in your mind. So what I was discussing initially was category 2, name of those donations which are 100% government. If you are if you are making donations with the government for the purpose of promoting family planning. And second is so only one you learn. Only one you learn, that is sufficient for you. Only one you learn. And in 50%, 2 donations you should learn. Then I will move to next page. In 50% there are 2 donations. First, government for any purpose other than family planning. Just reverse of 100% category. Any purpose other than family planning. When you are donating to the government, where the donated amount is only used for promoting family planning, you get 100% under category 2. When you are donating to the government, where the amount can be utilized for any purpose other than family planning, then you get 50% under category 2. And second, what you should learn is not to the government, but to any fund. It can be any fund of anyone for any charitable purpose. Now there are so many NGOs you can find. Do you know all those NGOs are covered in this category? NGOs. Whenever you donate something, you might find on the website of that NGO that your donated amount is eligible for deduction under section 80G. Do you know where these are eligible? in this second point which I am telling you, 50% with the limit category 2. Again, let me discuss with you category 2. I have told you in category 2 also there are two donations, 150. In 100 only one you should learn. When you donate to the government, where the amount will be utilized for the purpose of promoting family planning. In category 2 itself, in 50% there are two donations. First, if you are donating to the government, where the amount donated will be utilized for any purpose other than family planning. And second is to any trust, to any fund, any foundation, anything for charitable purpose. Now, there can be lakhs of charitable purposes. There are lakhs of NGOs which are operating in India. If those NGOs want income tax act deduction, then they have to separately apply under section 80G to get this certificate. Like for example, I am a member of one NGO, Save Life Foundation. Whatever is donated for this Save Life Foundation, this Save Life Foundation is helping the victims of road accidents. They train people, they file PILs, and they work with the government to make sure that road fatalities are reduced. There is a huge number of deaths daily which is taking place in India. So this Save Life Foundation is the foundation where if you donate, you get deduction under section 80G. Do you know where it is registered? Every charitable institution is covered under category 2. Every charitable institution is covered under category 2, 50%, and this second point. Because if you remember, all these are having Prime Minister, National, Prime Minister Institution, Jila, NBTC, Prime Minister, Jawaharlal, Indira Gandhi, Rajiv Gandhi Foundation, CM, Swachh Bharat, Clean Ganga. These are not normal NGOs. Every NGO is registered. If under 80G, amount donated will be under category 2, 50% ceiling. Now please raise your hand if you have understood the name of these NGOs, not NGOs, name of these funds which are used either in category 1 or in category 2, and even in category 1 and 2, 100 or 50. Now can you easily identify? Now if I ask you any name, then now you must be confident that at least you can tell that this fund is covered under 100% in category 1, or 50% in category 1, or 100% in category 2, or 50% in category 2. Right now you do not know how to compute, but at least now you must know that by the name, by having a look at the name, at least now you can identify under which category that fund and under which percentage of within that category which percentage is covered. If yes, please raise your hand till this point. If the discussion is clear till this point, that you can now easily identify that your fund is covered under which category and under what percentage, please raise your hands. Okay. Now I am moving to my next concept within 80G. So what is clear till today, or not till today, till this point, what is clear is only the name of fund. So now I can assume that if I give you any names of the fund, so now you can easily tell whether that fund is covered in category 1 or 2, and if 1, you should easily now identify whether it is 100 or 50. If you can identify which category, you must identify which percentage also. So this much discussion is only clear. Now I'm moving to my second stage of concept within 80G. Whatever you donate, let me repeat this. In category 1, whatever you donate is by default eligible. You need to simply multiply it by 100% or 50% as the case may be. Whatever you donate is by default eligible. If I'm saying donate, I'm talking about each contribution separately. Each contribution separately. If I have donated towards Prime Minister National Defence Fund, I will say that PM National Relief. I don't know what name I have. I have just spoken. Suppose it is PM Cares Fund. So whatever you donated in PS Care Fund, that is eligible. You have to multiply it by 100%. That's it. You donated in National Defence Fund. Whatever you donated is eligible. You simply multiply it by 100%. You donated in Jawaharlal Nehru Memorial Trust. Whatever you donated is eligible. You simply multiply it by 100%. Sorry, 50%. Is this concept clear? If yes, please raise the hands. Very good. But category 2 is different. Category 2 is different. In what sense category 2 is different is now I am saying that whatever you donate might not be eligible. I cannot say that whatever you donate is eligible. No. Whatever you donate, first of all, I will not check individual. Now, above I have written each contribution separate. Now I will write aggregate donation. Aggregate donation of all category 2 funds, whether 100% or 50 doesn't matter. Whatever you have donated in category 2, whether it is covered in 100% or 50%, club the total amount which is donated. In category 1, there is no need to club the total amount which is donated. Each contribution is having its own identity in category 1. You simply multiply it by 100 or 50. But in category 2, you cannot do this. Whatever you have donated, suppose I have donated in 3 types of donations which are in category 2, I will club those 3. So I will get aggregate donation. So whatever you donate, first of all, you check how much is aggregate donation of category 2. You check aggregate donation of category 2. Aggregate donation of category 2. This aggregate donation will be compared with 10% of adjusted total income. This aggregate donation, don't check individual donation, aggregate donation of category 2, whether 100 or 50, will be compared with 10% of adjusted total income, and then whichever is lower, this lower value is eligible. Whichever is lower is this lower value is eligible. Suppose I have donated in 3 different contributions. I donated to the government for family planning. I donated to any other institution for family planning. I donated to any NGO. So there are 3 different contributions. Suppose the donation is 1 crore, 3 crore, 2 crore, and suppose this 1 crore is with 100%, is the second is with 100%, and this third is with 50%. All these are category 2. So total is how much? 6 crore. This 6 crore will be compared with the 10% of adjusted total income. I will tell you what is adjusted total income. Suppose this total income comes out to be 5 crore. So which is eligible? Not 6. I donated total 6 crore. It is ineligible. How much is eligible? 5 crore. And now this 5 crore will be distributed in 150. So now I will give separate deduction. The total 5 crore is eligible. So what is the tax planning point of view? I will first utilize my 100% first. So for 100% I donated total 4 crore. So I will say that out of 4 crore, out of 5 crore, 4 crore into 100% is eligible with 100%, and out of 5 crore, remaining balance left is only 1 crore. This will be multiplied by 50%. What is happening in category 2? Total donation will be compared with 10% of adjusted total income. I donated 1 crore, which is eligible for 100% category 2. I donated 3 crore, which is also eligible for 100% category 2. I donated 2 crore, which is eligible for 50% category 2. My total donation becomes 6 crore rupees. When I computed my 10% of adjusted total income, it came out to be 5 crore. So which is less? 5 crore is eligible. Now out of 5 crore, I should now start computing deduction. So I will first ask a question to myself. If I have only 5 crores, where I have donated 6 crore. So one thing is clear that only 5 crore is the beneficial amount. I might have donated 6 crore, but Income Tax Act says you can take the maximum donation on which we will give you the deduction. That will be 5 crore only. Remember, 5 crore is not the amount of deduction. I'm not using this word. 5 crore is not the amount of deduction. It is the amount of donation which is eligible, for which you will get a deduction. These two are different words. My donation is different and my deduction is different. What is allowed or what I have donated might not be deduction. Suppose I have donated, even in category 1, suppose I have donated 10,000, and if my donation is covered under 50% limit, my deduction is not 10,000, my deduction is 5,000. So what I have donated might not be equal to deduction. So what I am using the word again, listen in category 2. I am saying that 5 crore is the eligible amount of donation. It is not deduction amount. It is donation which is eligible. So if 5 crore is the donated amount which is eligible, out of this, as a rational person, I will first utilize my 100%. For 100%, how much total I have donated? 1 plus 3. How much I have donated? Total 4 crore. So I will say to the department that out of 5 crore eligible donation, 4 crore is the donation where I was allowed 100%. So department says no issue. Out of 5 crore, 4 crore is your ATG, no problem. And out of remaining 1 crore donation, though in reality I have given 2 crores for 50%, but this 2 crore has become irrelevant. As per the provision, only 1 crore is relevant, and for 1 crore, department says now on this 1 crore you can claim 50%, so you will get 50 lakh as ATG, and total ATG becomes 4 crore 50 lakhs. 4.50 crore is total category 2 deduction here. If it is understood, please raise your hand. If still any doubt, you please wait. Don't ask me any doubt till I discuss with you a numerical. But if it is clear, please raise your hands. I think my system is hanged, so I cannot. Yeah, now I can see it. In category 2, what I am computing, whichever is lower, is the eligible donated amount. It is not the deducted amount. It is not the amount which is eligible, which is ATG. It is the amount of donation on which I will compute ATG. I hope little bit is clear in your mind. Let me now first discuss the last concept, adjusted total income, and then I will discuss with you a numerical from my book. Now adjusted total income is very easy. You have already computed adjusted total income in another section. Do you remember where you have computed adjusted total income? In 80GG. Oh, you have not yet seen that lecture of 80GG. So let me tell you what is adjusted total income. That concept is also used in 80GG. As the name suggests, total income is tax income. It has to be adjusted. So it is computed as follows: gross total income of the assessee minus long-term capital gain. There are two sections which are where I apply the tax on long-term gain, section 112. And do you remember which other section is the LTCG section? 112. Do you remember or not?
Sir,
A. Yes. So deduct those LTCGs, because of course if I have written about gross total income, LTCG or all incomes have been included, so you remove it. Then you remove short-term capital gain of only section 111A. Then you remove all deductions under section 80C to 80U except which? Except 80G, because this I am still computing. Except section 80G. Whatever deduction you have in the numerical, you deducted. This is my adjusted total income. I'm not discussing anything further. Now I'm directly moving to discuss with you a numerical, and then you will understood it better. You will understand it better then after having a discussion on the numerical. So let us discuss a numerical first. Then I will take the doubts. Till then there is no doubt, which I will discuss with you. Page 11.20. Let me discuss with you this very interesting question, and you will find it very interesting. A numerical, page 11.20 example. I think I should, no, let me note it down. X, gross total income of X is 16 lakh. You can note it down very soon, very fast. He contributed in his PPF. Hurry up, note it down very fast. In his own PPF, he has computed 40,000. He has not opted for optional taxation scheme. He has donated in 4 different funds. He has donated to the government for promoting family planning, 1 lakh. He has given the donation to government for promoting the interest of minority community. This is a new point. I will tell you where it comes. Promoting the interest of minority community. In India, minorities are the people who are other than the people who belongs to Hindu religion, because Hindus are in majority, so others are known as minority in India. Promoting the interest of minority community. 60,000. This is new deduction, new donation, which I have not explained. I will tell you now. PM National Relief Fund. 50,000. Please note it fast. And Rajiv Gandhi Foundation. $20,000. Now, can you tell me? Now, please tell me. Contribution in his PPF. Under which section I will get a deduction for this point? Hurry up.
ATC.
Very good. Very good. Very good. ATC. Government family planning. Can you tell me? It is in category 1 or category 2?
Category 2.
Category 2.
Category 2. How much percentage? 100 or 50?
100%.
100.
Very good. Very good. PM National Relief Fund. Category 1 or 2?
1.
1.
Percentage.
100.
100. 100.
Very good. Rajiv Gandhi Foundation. Category 1 or 2?
Category 1, 50%.
Very good. Category 1, 50%. So one donation you might not know, but you please note it down. It is covered in category 2. So this also you can learn in 50%. So this is new point. Hurry up. Please raise your hand if you have noted down. Shall I move to the next screen? Please raise your hands. If you have understood this much, then ATG is very easy for you. It's very easy and very interesting now. Okay, I'm moving to the next slide now. Let us start solving questions simply. Question is not asking for ATG. Question says you compute total income. That's it. Question says to compute total income. So I will compute total income. Let us compute total income now. So the solution. Computation of the It's very, very easy now. Total income of X for the assessment year 21-22. It's very easy. I have been given the GTI. How much is GTI in my question? 16 lakh. Less deduction. Under which section? ATC is 40,000. ATG. Now for this I need working note. ATG. So I will say that I will prepare note. If I get ATG, my answer is clear. Total income. That's it. Now, as I told you, how you will compute ATG? Note. Always, first of all, cover the donations of category 1. Donations where there is no limit on the donation. Where there is no limit applicable on donation. Which category is this? Can you tell me which category is this?
Category 1.
Sir, one.
Very good. Category 1. So, which are those? PM National Relief and Rajiv Gandhi Foundation. So, write the name. PM National Relief Fund. How much is the donation? 50,000. So this is donation. Then Rajiv Gandhi Foundation. Amount was 20,000. It is the donation. Then how much percentage? How much percentage? 100% and 50%. So this is deduction. 50,000. It's very easy. Category 1 is very, very easy. 10,000. 60,000. So it is ATG, but only of category 1. So it is not complete ATG. I have covered first category. I hope it is understood. Then second category, donations, where there is a limit applicable. Own donations. Which category is this? Category 2. So first you tell the names. It is government family planning. So I'm using short form family planning. Then for the promotion of interest of minority community. Minority community. Now how much is donation in family planning? Donation. Amount of donation. 1 lakh. How much is towards minority community? 60. Now you tell me, can I multiply it by 150? Hurry up, you tell me, can I multiply it by 150? Answer is no.
No.
Yes. I cannot multiply it. I need to do what? First I will do the total of category 2. How much is total? 160. So here I will prepare another column, donation eligible. This is new column which was missing in category 1, which was not required in category 1. I will compare this total 160 with adjusted GTI, adjusted TI. So I am preparing another concept, computing another concept, adjusted total income for the purpose of ATG. How much is adjusted total income in my example? GTI, which is 16 lakh, less what? All deductions of section 80 except 80G. So I have fortunately only 80C. How much? 40. Though I have this 60,000 also here. I have this 60,000 also, which is clear cut 80G. But I have to ignore entire 80G, whether of category 1 or 2. This is my adjusted TI. How much? 15,60,000, and 10% of adjusted TI is how much? 10% of adjusted TI is equal to 1,56,000. So which is less? 160 is less or 156 is less? 156 is less. So eligible donation is not 160, it is 156. And then I will say that as a rational person, out of 156, first of all, my 100% donation will be availed by me, and the remaining amount I will use for 50%. This is the balancing figure. Now I will multiply it by respective percentages, which is 100 here and 50 here. And now I will say that the deduction is 1 lakh into 100% plus 56,000 into 50%, that is 28,000. So the total becomes 128, which is denoted by B. And now I will say that total deduction under section 80G is equal to 60,000 plus 128, and it becomes 188. That's it. So the answer becomes, it is very easy, and now you will feel very confident that you have learned a technical thing. Whenever you learn any difficult thing, always it gives you motivation that yes, you are different. So what is the extra step here in category 2? Is this table or is this column? This is extra. I am repeating one point, that this adjusted TI 156 will be compared with donation. So 156 is not the deduction, it is the donation, which has to be multiplied by respective percentages to get the deduction. In case ATG is 100% clear now, please raise your hand. Even if there is 0.1% doubt, you ask me. Otherwise, raise your hands. If it is 100% clear, if the structure is 100% clear in your mind, it is very easy. ATG, in fact, is very easy and very interesting. It might be a little bit technical, but it is very interesting. Category 1, very easy. Category 2, just one extra step. Total of category 2 donations will be compared with 10% of adjusted TI, and whichever is less is the amount which is eligible for deduction. You multiply this eligible amount with 100% or 50% as the case may be. Now with this, my chapter deduction is over. I'm giving you 1 minute to think, and if you have any doubt, please ask me right now without any hesitation. In case it is clear, it's fine. If not clear, still it is fine. Ask me the doubts.
Sir, for computation of adjusted total income, do we need to deduct category 1 in category 1 donations which are certain?
No, because Act says skip or deduct all ATC to ATU except ATG. So I will not deduct ATG even if I know how much is exactly category 1 ATG. I will not deduct it.
All right, sir.
Please raise your hands if ATG is clear, otherwise you ask me the doubts. Very good. Now with this, deductions is 100% over. If you have my book with you, then you should wind up entire chapter of deduction within 2 days. If you have any other material or book, so whatever you have, you wind up entire topic from that respective material within 2 days. You have 2 days, and tomorrow I will tell you the timing. Tomorrow is the Sunday, but I will start with the topic house property, and that's all from my side. Wind up, I expect that you have completed salary, residential, and introduction. If you have not yet completed, then it is not a good thing. If you have not yet completed, then you will lose something, not me. I will not lose anything if you are not completing those. You must be having target that by what date I should complete these topics. So in my view, the topic salary, introduction and residential must be over from the side of the students. If you have not yet completed it, you should wind it up today itself. And within 2 days, you should wind up entire topic of deductions. And tomorrow we will start the topic house property. That's all, and goodbye.